Legends, how we all doing? Hope you guys are having a wonderful weekend. Real quick, guys, just want to review with you guys two trades that we had taken within the last 2 weeks: Euro US dollar and US dollar Japanese yen. So stay tuned. Euro US dollar to begin. Before we go into how the trade came about, we first have to understand the environment and, more importantly, what is going on from a structural perspective. So let's take a look on the weekly time frame to begin with. To begin, just looking at it from a very basic perspective, the basic question we want to ask ourselves is, are we buying at support? Are we buying at resistance? Are we selling at support? Are we selling at resistance? Once we ask ourselves this question, then we can have a good understanding from a statistical perspective, more importantly, probability of if we take a buy, what's the odds of that going through, as well as if we take a sell, what are the odds of that going through. And so taking a look at structure from when we look, we can see here that if we'd be taking buys, we'd be buying at support, and if we'd be taking sells, we'd be selling at support. But one more thing to keep in mind is that the last 5 or 6 weeks have been bearish, so therefore risk is warranted as short-term and moderate to higher risk, as there's no clear driver here, and more importantly, the duration of each trade is warranted as short-term, simply for the fact that we don't know if this bearish momentum is going to continue by cracking the support or if this support is going to hold. Now, taking a look at the daily time frame, disregard this movement, that is the past weeks. Before we go into the 4-hour time frame and seeing from an executional perspective how the trade came about, just want to make note on one thing here. Prior to taking the trade, we can see that price made a sharp impulse to the upside after rejecting the 113 handle, which is where the banks did size in their position. And on top of that, taking a look at the left, we can see that price has stalled out in this region before. Protocol calls for a daily breakout, creating short-term higher highs, followed by a continuation pattern to establish that third point, that higher low, to warrant a short-term continuation of this bullish momentum. Keep in mind, this is a liquidated movement from the descending momentum, therefore short-term. Everything in regards to the structure of the trade for the buys are just all mere indications: the bank sizing in, the stalling out of the 113 handle, as well as the short-term impulse breaking out of the descending trend line, all mere indications. Now we'll get into the executional aspect. On the 4-hour time frame, like I mentioned before, that sharp impulse we can see was right here, which was our first indication that market momentum may be shifting, just an indication once again. After price did in fact crack out of this short-term lower high, also where the initial bearish momentum did begin, invalidating it, we did want to see a continuation pattern, more importantly a higher low established to start to warrant a trend forming. In addition, we can see that price did in fact create a structural retest from where the initial bullish momentum began by breaking out of the previous resistance, creating newfound support, as well as pending orders will be sitting there, giving another indication that we will see further continuation of this bullish momentum. After rejecting the 113, 50, 60 handle, we did see price crack out of the last short-term lower high, creating short-term higher highs and warranting another potential indication of further continuation of this bullish momentum. Once we in fact retested and closed above, invalidating this short-term liquidation or relief from this initial bullish momentum that started from breaking the lows, we can see and state that market momentum confirmed for a bullish run to the upside. Keep in mind all the indications and confirmations we had backing us. First, we had the bank sizing in. Secondly, we did see price stall out not once but twice in the previous region here. Thirdly, we can see that structure did in fact see structure make a sharp impulse to the upside, creating short-term higher highs, invalidating where that initial bearish momentum began by breaking the lows, followed by a short-term continuation pattern, which is always great, simply for the fact that it's establishing that third point, that higher low. On top of that, we created a structural retest of where the initial bullish momentum began by breaking that resistance. From there, we created short-term higher highs by breaking out of the last lower high, out of that relief or liquidation. In addition, we did in fact close above where that initial bearish momentum began, invalidating the relief. From there, we did retest and we did see our continuation of that bullish momentum. Keep in mind, legends, the trade is warranted as short-term and moderate to higher risk due to 2 reasons. As we saw in the weekly time frame, we were buying at support, but market momentum was still, for the most part, in favor of the bears due to all of the major selling. And since there was no clear driver at the time, we wanted to be taking short-term trades, especially on a corrective movement, since we are trading in liquidation. And so with that, that was Euro US dollar for the buy. US dollar Japanese yen. Before we get into it from an executional perspective, once again, we have to take a look from a weekly time frame just to understand the environment and, more importantly, the structure of the trade. First question we have to ask ourselves once again: are we buying at support? Are we buying at resistance? Are we selling at support? Are we selling at resistance? The most basic question, which will give us a good understanding from a statistical perspective, what's the probability of our trade. Now, we can see here that price is in fact at a major critical area. We can see that price has rejected multiple times at the 114 handle, and so we would be buying at resistance and selling resistance as well. Now, we can see here that price is in fact at a major critical area. We can see that price has rejected multiple times at the 114 handle, and so we would be buying at resistance and selling resistance as well. Keep in mind, short-term momentum is ascending, therefore there is no real driver in this scenario. Duration and risk exposure is treated as short-term and moderate to higher risk. Those are your variables for your trade. Keep in mind the sell started by breaking the lows here, therefore this is all treated as a potential structural retest for another break of these lows right here. Now, before going into it from an executional perspective, just wanted you guys to take a look. You guys can see that there are some serious critical areas sitting there: monthly resistance, bank bearish level, weekly resistance, daily resistance. You can see extremely critical. Makes sense why the banks are looking to start taking sells near this region. We can see that in the past prices had a lot of difficulty breaking above, and so let's get into it from an executional perspective. So once we understood our statistics, our odds, our probability, and more importantly our variables, now let's take a look from a daily time frame what is going on. To begin, we can see here that price was starting to stall out at the tops near that 114 handle. We can see that there was a tremendous amount of deceleration and exhaustion at the 114.10 handle. A lot of dojis and bearish hammers and hanging mans, especially in the smaller time frames. Moving into the smaller time frame, protocol calls for switching momentum. First, we need a daily breakout to warrant a shift within momentum, which we did in fact receive. Next, we are looking for a continuation pattern. Reason being is that this is just an impulse that consists of 2 points, a high and a low. It does not constitute or warrant a trend. A trend has 4 points, a high, a lower high, and a lower low. So we needed that continuation pattern to formulate that lower high. Once we did in fact get the breakout on the daily time frame, more importantly breaking the lows here, creating short-term lower lows and potentially warranting this ascending trend as liquidation from this bearish impulse as well that started by breaking at the 114 handle. Odds started to shift more in the favor of the sellers. Statistics, it's all a statistical game in the end of the day, and so all we were looking for was our relief, our liquidation. With every impulse does come profit taking for further continuation down. We can see here, if we move into the 1 hour time frame, we can see that there is our daily break. From there we do get our short-term relief or liquidation, and so the trade came out as such. We were looking for an invalidation of this continuation pattern or relief for further continuation of that bearish momentum that we saw occur and break on the daily time frame. First and foremost, we need to invalidate, and that occurs by, in this case, breaking back below where this initial bullish momentum started, which was breaking these highs here, in which we can see here that structure did in fact break back below, invalidating this bullish momentum and stating that it was in fact liquidation. We can see here as well that price did come back, retest the previous area or the low in which it broke, creating a structural retest, which my students know does warrant a further and deeper movement than the short-term momentum retest. Once price did in fact break back below where that initial bullish momentum began, our first indication that we were going to see continuation of this bearish momentum. From there, we were looking for price to come back and retest the previous region, which we did in fact, and then we saw further continuation of that initial bearish momentum. Stops were above the last lower high, plus 15 to 30 pips to give it breathing room, and we simply targeted the daily support. Keep in mind the trade, duration, and risk exposure. Just like we saw in the weekly time frame, we assessed the variables. We stated that the duration was short term and the risk was moderate to high due to the fact that there was no driver. We were selling at resistance, but structure at the time was in a short-term uptrend. Remember, legends, trading is about quality, not quantity. 1 to 3 trades a week will do the job. Trading less does in fact equate to more. And so with that, legends, I hope you guys enjoyed this video. Look forward to speaking to you all in the next.